Hello everyone, welcome to the maiden edition of TVN BIZ Time. TVN BIZ Time is a business program of Television Nigerian, and we're going to be reaching you every day of the working week. We're taking you deep down the world of business, not just in Nigeria, but also we'll take a look at what is trending in the business sector in the international community. We'll take a look at the exchange rate of the Naira as it stands with some select currencies across the globe. We'll also bring you a wrap-up of the stock market report of the preceding week, and of course today also taking a look at what the Asian and US market. We'll be looking at all these and more. We'll be coming to you on TVN BIZ Time. My name is Nten Ekman. Well, for the headlines for today, Nigerians living abroad sent $22 billion home in 2017. That's according to the World Bank. Federal government targets fresh investments in the automobile sector. Michael Bloomberg pledges $4.5 million for Paris deal, and Capita to raise £700 million as losses deepens. These and more are the stories we're going to be looking at this morning on TVN Business Time. Now we're going straight to the details of those stories. Nigerians living abroad sent $22 billion home in 2017. That's an increase of 16.4% from the amount they repatriated in 2016, a World Bank report revealed just yesterday on Monday. Payments from immigrants back to their home countries rebounded to reach the new record in 2017, but the cost of transferring funds also increased, the World Bank said on Monday. The stronger than expected recovery in the remittances, payment that are key to supporting the economies of many poor countries, was driven by growth in Europe, Russia, and the United States. The bank estimates that officially recorded remittances to low and middle income countries reached $466 billion in 2017, an increase of 8.5% over the $429 billion in 2016. They are expected to increase by about 4% this year. Remittance inflows improved in all regions, and the top remittance recipients were India with $69 billion, followed by China, $64 billion, the Philippines, $33 billion, Mexico, $31 billion, Nigeria, $22 billion, and of course Egypt, $20 billion. The global average cost of sending $200 was 7.1% in the first quarter of 2018, and sub-Saharan Africa remains the most expensive place to send money to, where the average cost is 9.4%. While remittances are growing, countries, institutions, and development agencies must continue to chip away at the high cost of remitting so that families receive more of the money, said Dilip Ratha, lead author of the report. The bank calls on countries to take steps to simplify the process to reduce the cost, including introducing more efficient technology. And by region, Europe and Central Asia saw the biggest growth last year, jumping by 21%, while Sub-Saharan Africa rose by 11%. And to our next story, federal government targets fresh investments in the auto sector. And according to that story, the federal government is targeting fresh investments in the auto industry through the National Automotive Industry Design and Development Bill. The bill, which has been passed by the National Assembly, is currently awaiting the assent of President Muhammadu Buhari. Director General, National Automotive Design and Development Council, Jelani Aliyu, said this during a chat with journalists in Abuja just yesterday. He explained that the bill, which was initiated by the council, was expected to ensure that automotive business in Nigeria were legalized and will not suffer policy changes as a result of administrative change of government and other related issues. Aliyu said the plan will see more investors in the automotive sector make investment commitments worth billions of dollars. He also stated that the bill, when signed into law, will ensure that more investors come into the country's automotive sector and deepen investments, while also promoting the local content policy of the federal government. The DG confirmed that the board of the agency had also given approval for the establishment of public-private partnership automotive service hubs across the country. The federal government had, in October 2013, approved the implementation of the National Automotive Industry Development Plans. And the next story, shareholders laud UBA's higher dividend and subsidiaries performance. And that story says that shareholders of United Bank for Africa PLC have expressed satisfaction over the 2017 full-year financial performance of the bank and the increased dividends payout declared by the lender. They expressed their views at the 56th annual general meeting of the bank held in Lagos on Monday and lauded the achievements of its African subsidiaries, which contributed over 45% of the group's income. For the financial year ended December 2017, UBA's management proposed a total dividends per share of 0.85 naira, comprising 0.20 naira interim dividend, which was already paid by mid-2017, and a final dividend of 0.65 naira, which was ratified by shareholders during the AGM. The chairman, Progressive Shareholders Association of Nigeria, Mr. Boniface Okezie, praised the bank's chairman, Tony Elumelu, and the group managing director, Chief Executive Officer Kennedy Uzoka, for the hard work in ensuring that the bank recorded more improved performance in the year under review. And moving ahead now, U.S. oil floods Europe and threatens Nigeria's exports. That report says that Nigeria's crude oil exports are under pressure as the United States is flooding Europe with a record amount of crude as efforts by the Organization of Petroleum Exporting Countries to balance the oil markets bear fruits. Russia paired with OPEC last year in cutting oil output jointly by 1.8 million barrels per day, a deal they say has largely rebalanced the market and one that has helped elevate global oil benchmark Brent crude close to 4-year highs, while Brent, against which Nigeria's oil is priced, rose by $0.37 to $74.43 per barrel as of 7 p.m. Nigerian time on Monday, compared to around $66 at the start of the year 2018. Now, the relatively high prices brought about by that pact, coupled with the surging U.S. output, are making it harder to sell Russian, Nigerian, and other oil grades in Europe, Reuters quoted traders are saying on Monday. And Nigerian oil exports are expected to fall slightly in June to just under 1.8 million barrels per day, loading plans showed on Monday. The export plan comprised 60 cargoes for a total of 1.796 million barrels per day, compared with the 1.895 million barrels per day in May's revised export program. Well, June's exports will also include 4 cargoes of Apple condensate with 133,000 barrels per day, compared with the 3 cargoes in May, offering 97,000 barrels per day. And we'll now take a very short break. Those are all the stories we have on the local business scene. We'll take a very short break. When we come back, we're going to bring you stories in the international business scene. This is TVN's Business Time, and I am Tenek Bang. Don't go away. For almost a decade, the Nigerian army have given their all to ensure that our dear country is not overrun by Boko Haram insurgents. Some have in the process paid the ultimate price, while many will forever live with indelible scars occasioned by their determination to protect the country, no matter the hurdle. Despite these, they have remained resolute and undaunted, and today, all territories the insurgents once took control of have been recaptured and normalcy restored. And now, for the first time in a long time, the end of Boko Haram is foreseeable. Therefore, the wisest thing for the remaining insurgents to do is to surrender today or face total destruction from the army. Remember the Nigerian army will stop at nothing to ensure that total peace is restored in all parts of the country. So, be wise and embrace peace today, or get ready to be ruthlessly dealt with. This message is brought to you by the Coalition on Conflict Resolution and Human Rights in Nigeria.
Information remains the bedrock in every stage of development. It develops both the human mind and the society at large. Television Nigerian is here to avail you with that information you need for all-round development through its mind-blowing programs such as news, talk shows, health and safety, governance and politics, sports, entertainment, kids, documentaries, finance, global happenings, human disposition from childhood to adulthood. It's a manifestation of what you see, what you hear, and say. Tune in and stay tuned to TVN, Television Nigeria, broadcast beyond boundaries.
If you're just joining us, the program is TVN BIZ Time with me in 10, Ekpang. And just before that break, we brought you business stories from the local scene. Let's move on to the international scene now. And top on the list, climate change. Michael Bloomberg pledges $4.5 million for Paris deal. And that report says that former New York City Mayor Michael Bloomberg says he will pay $4.5 million. That's about 3.2 million pounds to cover some of the lapses U.S. commitment to the Paris Climate Accord. He said he had a responsibility to help improve the environment because of President Donald Trump's decision to pull out of the deal. The withdrawal was announced last June and sparked international condemnation. It will make the U.S., in effect, the only country not to be part of the Paris Accord. The Paris Agreement commits the U.S. and 187 other countries to keeping rising global temperatures well below 2 centigrade above pre-industrial levels. As part of the agreement, the U.S. had pledged $3 billion to the Green Climate Fund set up by the UN to help countries deal with the effects of global warming. The money promised by Mr. Bloomberg does not aim to cover this, but the U.S. contribution to the UN's Climate Change Secretariat. America made a commitment, and as an American, if the government is not going to do it, then we all have a responsibility, Mr. Bloomberg was quoted as saying on CBS. And to our next story, Capita to raise £700 million as losses deepen. And that story has it that Capita has reported a $513 million annual loss as the outsourcing firm set out plans to revive its indebted business. Profits were wiped out by £850 million of one-off costs, mainly from writing down the value of acquisitions made under its previous management. The company said it will raise £701 million through a rights issue to fund a reorganization of the business. Shares closed 13% higher at 180.8 basis points in London, valuing Capita at just over £1.2 billion. It operates the London congestion charge and runs an electronic tagging service for the Ministry of Justice. The losses compares with $89.8 million deficit in 2016, while revenues last year fell by 4 to £4.2 billion. However, new Chief Executive Jonathan Lewis dismissed any comparison to Caroleon, the services and outsourcing group that went bust earlier this year. Mr. Lewis has announced a major overhaul of the company, which has debt totaling £1.7 billion. The rights issue will reduce borrowing as well as fund investment. And on to the next story on TVN BIZ Time this hour. Google owner Alphabet sees profits soar. And profits at Google owner Alphabet jumped almost 73% in the first 3 months of the year as revenues from internet advertising soared. The strong results came despite fears that rising costs and regulations could undermine the search giant's performance. First quarter net income rose to $9.4 billion from $5.4 billion a year earlier, beating analyst expectations. Revenue jumped 26 to $31.1 billion from $24.8 billion. During the quarter, the search giant enjoyed a $3 billion boost from a change to accounting rules, as well as a $1.1 billion uplift from currency exchange movement. However, it attributed much of the growth to higher pricing for online ads on its Google search engine, YouTube video search, and partner apps, as well as websites. Ivan Feneset, an analyst at Tigris Financial Partners, said the strong economy has companies spending more on advertising, and we have an ongoing migration from traditional types of media advertising to greater online and social media-based advertising. And moving ahead now, market report for last week. That's the stock market report in Nigeria. And of course, we did report earlier over the weekend that the total turnover of 3.008 billion shares worth 30,296 billion naira in 24,036 deals were traded this week. That's the preceding week that ended over the weekend by the investors on the floor of the exchange, in contrast to a total of 1.415 billion shares valued at 19.644 billion naira that exchanged hands last week in 20,659 deals. The financial services industry, measured by volume, led the activity chart with 2.539 billion shares valued at 23.510 billion, traded in 13,179 deals, thus contributing about 8.43 and, of course, total equity turnover volume and value, respectively. The oil and gas industry followed with 237.443 million shares worth 2.358 billion in 3,735 deals. The third place was occupied by consumer goods industry with a turnover of 60.840 million shares worth 2.654 billion in 3,141 deals. While trading on the top three equities, namely FCMB Group PLC, United Bank for Africa PLC, and Owando PLC, measured by volume, accounted for 1,816 billion shares worth 9.599 billion naira in 3,851 deals, contributing 60.37, all of that in turnover volume and value, respectively. And we bring the top 5 gainers for yesterday in the floor of the Nigerian Stock Exchange. We'll give you all of that when we come back after this very short break. Stay with us. Nigerian army have given their all to ensure that our dear country is not overrun by Boko Haram insurgents. Some have in the process paid the ultimate price, while many will forever live with indelible scars occasioned by their determination to protect the country, no matter the hurdle. Despite these, they have remained resolute and undaunted, and today, all territories the insurgents once took control of have been recaptured and normalcy restored. And now, for the first time in a long time, the end of Boko Haram is foreseeable. Therefore, the wisest thing for the remaining insurgents to do is to surrender today or face total destruction from the army. Remember, the Nigerian army will stop at nothing to ensure that total peace is restored in all parts of the country, So, be wise and embrace peace today, or get ready to be ruthlessly dealt with. This message is brought to you by the Coalition on Conflict Resolution and Human Rights in Nigeria.
Information remains the bedrock in every stage of development. It develops both the human mind and the society at large. Television Nigerian is here to avail you with that information you need for all-round development through its mind-blowing programs such as news, talk shows, health and safety, governance and politics, sports, entertainment, kids, documentaries, finance, global happenings, human disposition from childhood to adulthood. It's a manifestation of what you see, what you hear, and say. Tune in and stay tuned with TVN, Television Nigeria, broadcast beyond boundaries.
It's good to know you're still there watching the program TVN BIZ Time. There's our on television Nigeria. And just before that, we told you we're going to bring you the exchange rate of the Naira assistance with some major currencies today. So we'll bring you that. And for this morning, $1 is exchanging for 305 Naira. The British pound is exchanging for 428 Naira 60 kobo. The Swiss currency is at 313 Naira, while the South African Rand is changing at 25 Naira 3 kobo. Now let's bring you the Asian market report as at close of business yesterday. Well, the Nikkei rises. Financials led the gains on higher U.S. yield. Japan's Nikkei share average rose to near 7-week highs on Tuesday. That is as today, with financials leading the gains after U.S. bond yields spiked to 4-year highs. The Nikkei advanced 0.67% to 22,235, near last week's high of 22,360, while the broader topics gained 0.71% to 1.763 deals. While banks in the U.S. rose 1.9%, with Mitsubishi UFJ climbing 2.5% and Sumitomo Mitsui Financials up 1.5%. Insurers gained at least 1.4%. And with Japanese financial institutions stepping up investment and lending in the United States in recent years as negative interest rates at home crush domestic returns, higher U.S. borrowing costs are seen as improving their margins. Exporters also benefited from a fall in the yen to 10-week lows, with Toyota rising 1.6% and Shin-Etsu Chemicals up 1.5%. Now let's bring you the most popular international stocks as at today. General Electric is among the very top highs, and we have others that rose with it. And the top 5 losers and gainers in the U.S. markets are HBI, that is Chenry Sen. We have ALK, that's Alaska Air Group. We have FLR. We have ARNC. KIC, that's Kraft Heinz Company. Micron Technology. Western Digital. Freeport McMoran are all of the top 5 gainers and losers on the U.S. market as at today. And of course, those are all the details we have for you on TVN BIZ Time for Tuesday. Definitely, we will be back with all of those stories and many more tomorrow. But just before we go, let's give you the headlines that came on top of our program for today. Nigerians living abroad sent home $22 billion in 2017. That's according to a World Bank report. Federal government targets fresh investment in auto sector. Michael Bloomberg, that's on the foreign scene, pledges $4.5 million for Paris deal. And of course, we did tell you that Capita is set to raise £700 million as the company faces deeper losses. That's all for TVN this time with me, Internet Bank. Definitely, I'll see you tomorrow. On behalf of all members of the crew, do enjoy the rest of our programs. Bye for now.